Good evening, ladies and gentlemen. Welcome to Business Today Television. Not only are we seeing a very, very strong rally at record levels in the secondary market, it's the primary market of the IPOs that is equally extremely hot and raring to go. We've seen many, many issues subscribed many times over, and the listings have been fantastic. Joining the queue now is Netweb Technologies, whose 631 crore rupee offer opens for subscription on July 17th and will be open till July 19th. The price per share is somewhere between 475 to 500 rupees per share, and the total issue size is about 631 crore rupees. It's a very high-end technology-driven company which does a lot of high-end computing, high-end storage, private clouds, and artificial information systems. Joining us to discuss what the issue proceeds will be is Mr. Sanjay Lodha. He's the chairman, managing director, and the founder of Netweb Technologies. Sanjay ji, welcome to Business Today Televisions. Firstly, our congratulations for this giant step that you're taking. Please inform our viewers what will be the utilization of these proceeds. 631 crore rupees you are raising at a price point of anywhere between 475 to 500 rupees per share. Sir.
Thank you so much. It's really a pleasure to come and talk to you. So basically the total issue size is around 631 crores. Out of that, the primary was 257 crores, but we did a pre-IPO round. So basically the primary is around 206 crores. So basically, if you really see, we want to expand our manufacturing facility that is there. So because since we are actually we are a full stack company. We manufacture our products, we design our products, we manufacture our products, we have our own software, and then we have our service stack. So basically what happens is that basically we need a specialized kind of manufacturing. Like basically the normal SMT which happens in India is basically somewhere around 6 to 12 layers, but basically a server motherboard is 18 to 22 layers. And even we are trying to get into manufacturing of networking switches also, which is even more than that, that is 24 layer plus boards. So basically these kind of things, they require different kind of manufacturing facilities. So we have a capex allocation out of 206 crore of around 35 crores, which basically we'll be using for setting up our new SMT line. And the land is already acquired, and basically we'll be trying to set that up. We have been a very, very debt light company overall, but we have a small debt of around 20 crores approximately, and which will be also paying it off and will become debt free completely. And the other basically, as you might have observed for last 2-3 years, the way we have been growing, that the momentum we have been growing. So definitely that will increase our working capital requirements. And basically, so the rest will be used for the working capital funding.
Okay, wonderful. Mr. Lodha, let's get deeper into Netweb Technologies. For the uninitiated, if you think of high-end computing, think in terms of supercomputers. Of the top 50 supercomputers installed in India, whether it is at IITs, whether it is at mathematics institutes, a large percentage of that business is done via Netweb Technologies. If you look at the March 23 numbers, Netweb declared a profit of 47 crore rupees and sales of 445 crores. Mr. Lodha, how did you get into this world of high-end supercomputing? And tell us, who are your clients and what are the likely margins and revenue that you enjoy from this space? I believe 70% of revenue comes from supercomputing and private cloud services.
Yeah, so thank you. Actually, basically, it's a very good story, actually, how we started. Basically, we started in 1999, actually, but basically the supercomputing we started in 2003. So from the initially, we were trying to focus only into the high-end computing, that kind of player I have. I'm a third generation entrepreneur. So that was there. But basically in 2003, if you recall, India had a basically embargo, and basically US was not giving supercomputing to India. So Indian researchers and scientists, they were all basically looking for supercomputing and they were not getting power. So we worked with them and we built the first supercomputer for us in the year 2004, wherein basically it was ranked as 269th fastest supercomputer in the world. It was installed at IMSC Chennai. Okay, so basically it was a proud moment for India, basically wherein the US was not giving supercomputer, and we in India was able to build a very mammoth amount of a supercomputer. So the journey started there, and then basically we kept on building supercomputers. We have built more than 300 supercomputers. The latest one in the edition is Aravat, which you guys might be already aware. It was deployed only last month, and that is the 75th fastest supercomputer in the world. And so that is an AI, that's an AI supercomputer. So it's an amalgamation of AI and supercomputing. Again, in the domains we intermingle with each other very seamlessly actually. So that's again, so this is where we have installations all across, and supercomputing has been a prime area of business. The other
Sanjay,
area,
let me just dig deeper into
not able to hear
this.
you.
Am I audible now?
Yeah, it's better. Yeah.
Okay, let's just dig a little deeper into your supercomputing business. If I understand correctly, it is assembling a supercomputer based on the parameters that are given to you by your customer. It could be a defense establishment in India, it could be an IIT, it could be the Weather Bureau. Am I right?
No, actually what happens is that basically this is more than that. What we do in supercomputing is basically we are what we do is we are a full stack company. We basically we design our hardware, we manufacture our hardware. Basically our servers basically are designed very well so as to cater the workload and give better performance on a supercomputing system, like kind of GPUs you need and those things. So basically the PCI completely bridging and all those basically layering is done accordingly so that it can enhance performance. So one is the hardware design. Second, then we do the manufacturing, as I mentioned to you. Basically, this is a unique manufacturing. Then we have the software stack. This is the differentiator which we bring on the table vis-a-vis, because we don't have domestic competition. Competition is from MNCs, and basically here the software stack is from us. Whereas with our competition, what happens is that they are primarily hardware companies. They buy the software from third party and bundle it and then sell it. In our case, we have our own software stack. So that's how we create it. So it's end to end completely.
Okay, let's dig a little deeper. So it's a 24-year-old company that's going public from Monday onwards. The post-issue market capitalization will be something like 2,800 crore rupees, and retail investors will have something like a 35% allocation to the total offer of 631 crores, so 220 crores. 30 shares is the minimum application for about 15,000 rupees. Apart from supercomputing and private cloud, what are the other lines of business that you have, Sanjay?
Yeah, actually, we have been working because you know that how AI is gaining momentum. But basically, you know, in AI, GPUs have got a larger role to play. And basically, we started working on GPUs since our attachment with supercomputing from the year 2010 and 11, when GPUs were started being used for computation. So basically, we have design systems which can have different kind of GPU configurations. Plus, we are also able to develop our own application called Qbytes, which completely eases the workflow of a GPU workload actually. So basically, like it take care of the different segments like your learning, your inferencing, your production, everything together. So that solves that problem. So AI, we definitely feel that we have a much more better hold. It's currently only 7% of our business, but we feel within next 2 to 3 years, it will become around 13% of the business, because even our other areas are also growing. So basically, similar way, we think that AI will definitely grow for us. The another area which we are getting into networking switch manufacturing, because if you see on the high-end side of the business, networking switch was absent in our portfolio. And we see there is a huge opportunity, because basically in India, there are very few manufacturers for networking switches. Again, we are focusing only on enterprise and data center grade switches. And basically, and for security regions also, it's very important for basically the country to have domestically manufactured switches. So that is another area. Then one more new area we are getting into, 5G O-RAN. So that is targeted towards private 5G, completely make in India. So these are the areas we are working into.
Okay, Sanjay, a couple of more questions. I'm just looking at your profit after tax and sales numbers for March 22 and March 23. The numbers moved pretty well. 22 crores of profit after tax in March 22 stood at 47 crores in March 23. Sales, of course, rose to 445 crores from 248 crores. The thing that probably some investors might look at is the net profit margin at somewhere between 8 to 9%. I understand that hardware per se offers only that kind of net margins, but do you do you personally feel that the road ahead would see the net profit margin moving towards double digits?
So basically, I like to make a comment here, actually, really speaking, that basically about my margin, if you see last year, the PAT was somewhere around 11, around 10, around very near to 11%, actually, really speaking.
Okay.
Okay. And basically, year prior to that, it was around 10%. But basically, more than the PAT, if you see at my gross margin, that will give you a better idea. Because basically, my gross margins have been 25% plus. And the reason behind this, because we do software and hardware complete integration and the complete solutioning. Whereas my competitors, they are all in single digit gross margins. Forget about the net margins, they are on single digit gross margins. So my margins are definitely better. And plus, I am working on it because if my customers today are not small and medium business, they are large enterprises. 50% of my business comes from the government, 50% of my business comes from the enterprise and corporates. And they're all large customers. So basically, in the production environment, you have to price your products correctly. Else, basically, you cannot succeed and you have to grow your business. So I think my margins are quite decent. And what will happen in future is that AI will add more margin to my business. The AI systems and workstations, and basically the networking switches will add more margin. So personally, I feel maybe I see my gross margin going up from 20, 25, 26% to maximum of 30% within 2-3 years. But at this point of time, I'm not seeing it growing beyond 30% because it will take some time and how it evolves. But at this situation, it is looking like that to me.
Okay. Sanjay, what's also interesting is that you've kept the bare minimal how should I say, IPO offer, which is a 25% dilution, and the promoters will continue to hold 75% stake in the company post-listing. Do you have some rivals in India that you would like to buy out, given the IPO proceeds coming into your bank account, or would you like to grow organically only?
Yeah, basically, primarily speaking, we don't have real competition, telling you very clearly. What happens is that definitely we are working on a lot of new technologies. Okay, we are working on 5G, we are working on networking and all that. So maybe we may think about, at this point of time, we have not identified, but we may think about some acquisitions actually for basically trying to build everything on our own. We can try to get into some acquisitions at some point of time. But at this point of time, we are not looking at that because we are looking the way of growth. But the purpose of getting into an IPO is to acquire talent. Because if you see my competition is MNC, and basically the way we are growing, we want to acquire talent, we want to retain talent, we want to offer ESOPs to our own employees. We have already done that. So basically that was the basic reason why basically we wanted and we went for an IPO. And we are diluting the minimum required to get listed.
If I may ask, what's the staff strength and how many are engineers?
Yeah, we have around 300 people working for us approximately, and out of them 175 are engineers at this point of time. And I know your next question will be, what is the attrition rate? So I'm very proud to say my attrition rate is around 8 to 10%, which is much below the industry level. And that is not at the top level. That is primarily at the entry and the mid level.
Wonderful, Mr. Lodha. Our full congratulations to you. I believe the company will be listed on July 27th. You have our best wishes for a fantastic listing and a fabulous oversubscription. I'll just repeat the numbers that we have in front of us. Netweb Technologies goes to the public IPO route to get listed. The issue opens on July 17th, closes on July 19th. The price range is between 475 to 500 rupees per share. It's a 631 crore rupee IPO, of which 206 crores is fresh issue. The proceeds will be utilized for working capital, prepayment of debt, as also construction of a plant. The company is into high-end computing, private cloud, AI systems, as also high-end storage and data center services. The top line for March 23 was 445 crores and a profit after tax of 47 crore rupees. Thank you, Mr. Lodha, for sparing your valuable time. And as always, you have our best wishes for a fantastic listing and a great IPO. Thank you for joining us.
Thank you so much. Thank you. Thank you. Thanks for your time. Thank you.
My pleasure.
If you like the video, do like, comment, share, and subscribe.